I've been investing £5 a day into 3 different portfolios with different risk profiles for 62 days now. The first portfolio, named Own the World, is a low-risk, simple pie made up of one ETF, a FTSE All-World Tracker. This pie serves as our benchmark for the series as it's a reflection of the performance of the global stock market and is currently up 2.61% from our £310 investment. The second portfolio, NasWorld, bears a bit more risk and a bit more volatility. It consists of 3 equally weighted funds with different aims. JGGI, an actively managed global growth and income fund, EQQQ, a passively managed Nasdaq 100 ETF, and DGRW, a US dividend growth ETF. The pie is performing slightly worse than our benchmark, at 1.76% since we started. The final portfolio, Chips and Houses, has been our best performer of the 3 pies for some time now. This is both the riskiest and most volatile of the pies, as it contains individual stocks rather than funds that hold anywhere from 50 to several thousand tickers. The pie targets 20% of each of these monthly paying dividend stocks, Main Street Capital and Realty Income, and 15% in these AI and semiconductor stocks with AMD, Broadcom, Nvidia and Palantir. We did receive our monthly dividends today from Main and Realty with 20p and 18p respectively that gets reinvested straight back into the pie. Overall, the pie is up £20.54p or 6.63%, largely on the back of AMD, which is now nearly doubled in value, up 46.69%. To show the varying degrees of volatility, here's a side-by-side comparison of the 3 pies' performances over the past week. At the top, Own the World sees limited fluctuations. At the bottom, Chips and Houses sees wild swings throughout a day, and NasWorld sits somewhere between the two. To further this, Chips and Houses has both the best 1 day and worst 1 week rate of return across the 3 pies. That's it for day 62. Follow for more.